In this morning's Eye on Money, we are looking at key financial and tax savings moves to consider with just 44 days left in 2020. The pandemic has devastated the economy, of course, and parts of the CARES Act, which provided financial relief, will expire on December 31st. Some of those emergency measures, including stimulus payments and extended unemployment benefits, could add to confusion in the upcoming tax season. CBS News business analyst Jill Schlesinger joins us now with what you need to know. Jill, good morning. You say I need to be thinking about tax season now. Why?
Well, as you said, with just 44 days left, there aren't that many things you can do after the year passes. So the most important thing to remember is part of the CARES Act is really causing people to worry. Your economic stimulus checks, they are not taxable, so you don't need to really fret about that. However, millions of Americans receive some form of unemployment throughout 2020, whether it's a federal or a state program. That is taxable, and a wide majority of people did not withhold taxes based on that. So here's what you need to do. You go to the IRS website, irs.gov, go to the withholding estimator, see if you can change your estimates or potentially make a payment so you have no penalty or surprises in April. Again, really important for everyone, especially for those who received unemployment benefits and did not withhold.
5 Americans worked from home. Are there tax considerations if you worked in a different state?
Yeah, this is a very strange quirk of this particular recession because so many people did go out of state. A lot of younger adults went back with their families. Well, this could be a benefit, but it could be a problem as well. So what you need to do is compile the number of days throughout the year that you worked in your primary location, then the days that you worked elsewhere. Now, this could also include not just a different state. It might be a different jurisdiction. You might live in New York City as your primary, and you moved upstate, and you don't have to pay New York City tax potentially. So you compile those days, then you check with your location where your primary residence is, see what the rules are, and then you may want to adjust your withholding accordingly. But again, a little bit of homework for you. It could pay off.
Jill, how do you know what you're able to deduct for a home office since so many people were working from home?
This may have been the #1 question I received on my podcast. I can't wait till I get to April so I can deduct everything that I've done. Not so fast. Here's why. When we had a tax cut in 2017, that basically erased the ability for an employee to deduct the home office expense or any miscellaneous business expenses. Now, that said, if you're self-employed, if you're a gig worker, you may be able to deduct your rent or your mortgage, your property taxes. You really have to make sure that you comply with the IRS rules. Has to be regular use of your location or even partial location. And of course, you cannot be a pig. Don't say everything is for work. Check with your IRS rules, please, because it is an audit flag.
Yeah, that's an audit trigger. My accountant always told me. Jill, thank you very much. We appreciate it.